Welcome to TradeTheNBI.com. This is John's reports for the 25th of September. No surprises. Friday's action, making new lows. A little bit of a work back into where typically when we break 0%, usually you get some attempt to move back up towards that 0%. That's exactly what happened. And the sellers returned right there because we still have NBI white lead coming off that clear DOC spread here of the rejection of midterm buyers to the long term. And we had orange rising now with orange falling. That's a little bit of tiny support, but with that shakeout plummeting as it is, and we're still extremes below the red line, meaning the lows. But we've had this line marked, which is actually should mark it a little bit more accurately. The actual low of that bar is 43.22, just so that you have the exact number. I'm going to go a little higher. Right there we go. So that's the expectation for positive extreme fill going all the way back to June. So that would take care of that. And now, not that far away. So amazing when you're looking at it from, things rising all the way back up here in the 46, understanding that where you're going to be heading. It's always powerful to know. It's just a matter of waiting for the right signal to trigger at that particular stage. From an NQ standpoint, holding up much better. Hasn't really broken through its lows, so the Nasdaq's been the strength, so to speak, within this overall weakness. Not a surprise. Treasuries, now we're in a little bit of an extreme at this level. Bond market is kind of expecting more rate increases. So they're kind of preemptively with that rate hike, but definitely a flight to safety. No shock with that because you don't have to play the risk of, stocks in that when you can have your guaranteed return. And in some cases, they're going to believe that's justified. The biggest problem is this, because it doesn't make sense to be in bonds if you know inflation is going to continue to rise and you would be able to get even better rates. So, oil is going to be the number one issue. And what's interesting about it is the bifurcation that we're seeing, because we're not getting a follow through on what you would expect from gold and or cryptos at this particular stage, which means they're going to have a massive rally when that final breakthrough does take place. The euro barely holding on, still above the range, so they're doing their job just to keep it from collapsing. But once they get into that 105 range, look out, because the last time it happened, it didn't take long before it broke parity, and certainly the eurozone is in no better condition than it was when that happened. So everything that's taken place prior has just been an influence from other parties. The eurozone has got nothing to offer at this particular stage. And from a gold standpoint, you can see this is within that weakness, still NBI white leading. Very unusual. But as we've talked about before, not hard to keep that market under control with the paper derivatives that mostly trades gold at this particular stage. And then when we look at Bitcoin in that, unable to sustain anything, though, the potential for support rally here. And that would be interesting, at least from a shakeout standpoint. You see we've had ever increasing shakeout, a little going positive. That would have to turn around pretty quick, though. And within the selling that's taken place, it hasn't been as bad as ETH, relatively speaking, has been far weaker within that. And we talked about this when we ended up with these dips. It was going to take a bit for that shakeout to recover, to give it an opportunity to do anything, but still nothing there. So all those that have touted the crypto as the answer, again, the dollar isn't dead yet. While it may be suffering in the bifurcation that has taken place in the economy, is certainly going to have an impact. It's still the number one used situation as far as trading and commerce goes. From a 50K standpoint, well, you can see it from our sell signal that took place back up here at that 45 range, continuing, no abatement, and no close above that 23%. So pretty clear from a 50K when you look at it from those standpoints. And of course, when the NBI white rises, expectation was moved to the zero, but the problem is you're already so close to the zero, it's not all that significant. When it happens and you're up here above the 50% in that, then it makes a much more significant move. But overall, Pretty clean as far as pink bar and the readings go from that standpoint. When we look at Friday's action, there was that pre-market run up. Short signals came to 50% on that, spiked up again, and then there it is, that white MBI lead and that expectation to move back to the zero. Not only did it do that, but the white MBI continued to lead, and that led to new lows. And then, of course, nice quick spike for forcing short cover, but that's all it was, not enough to sustain anything. And then we plummeted right back down. And then what we've got here from that plummet is a slight improvement. We had run up a little bit to create some more short covering, but as soon as that happened, this is what we've been seeing right now, just a free for all, as the clear indication that the Eurozone it's got some problems, and you see that spreading, particularly with oil. So as oil goes, we're going to see the markets react, and it's going to become exponentially more violent because as that disparity grows, it's going to become clear that it's going to have a massive impact on the resilience of the U.S. economy. Before, when there was excess liquidity, you could absorb it. It doesn't exist as much anymore, at least in the mainstream. Certainly in the excesses it does, but for the average individual, it's going to cause significant cutbacks and reductions, and that, given a consumer-based economy, is going to be problematic from a growth standpoint, and that will start to affect earnings going forward. So that's the long and the short of it for now. As always, though, you can look for me on Skype chat. Trade well. We'll talk again later.